Well, ladies and gentlemen, today the role of a modern CFO in terms of transparency, security, and budgeting is very critical. Another priority is to maintain governance and transparency along with alignment to sustainability and credibility.
So I think we've got a great group. I mean, just to quickly, everybody's been introduced. The whole purpose is to discuss governance and transparency. I think a lot of us have been reading in the newspaper about issues, scandals. I think CFOs are at the forefront of it. If you take, unfortunately, the perception in the market or even a regulator, the first person they come and meet when they come into an office when there's a scandal, it's the CFO, whether you like it or not. And there's no bad reason for it. It's because of the fact that you have all the data. They need the data, they will come and meet you. That's the first instance you come. And at the end of the day, a company which has good governance, you get the credit and you get the debit for it, as all of us as accountants would know. Just a show of hands, I just got to know today that a lot of CFOs who are not CAs. How many of you are chartered accountants here today? Just a show of hands. Okay, it clearly overruns the non-CA. But this is about a modern CFO, right? So that's one of the topics of discussion. So maybe in the interest of time, I'll start with Abhishek. So Abhishek, welcome. And obviously you're a CFO of a company which is evolving. It's evolved during the pandemic. How has the role of the CFO evolved along with the company in the last few years, as you started this company and how it's grown? So if you can share your thoughts.
No, thank you, Arpinder, and thank you for having me here. I'm the CFO of OYO and have been with OYO for a little over 7 years now. So have been through that journey of growing up and transformation. I think the role, and look, I'm just going to share my own experiences, no expert in how industry has shaped or anything, but from my personal experience, I think the role has clearly become the role of a business partner, a business enabler, and a conscious keeper, right? So to give you some examples, when I joined, one of the first things I wanted to do was to, let's keep a meeting for a margin review, right? And nobody would show up. Nobody would come to the meeting. So you had the responsibility of being a business partner where you would define dumb the finance down for people on the business to understand and percolate into the culture of the organization. So we had to coin, since we were in a disruptive industry, we had to coin our own terms, like we came up with a term called CURN, C-U-R-N, cost of a used room night, right? And we said that we're going to hold people accountable to CURN. So that's one part, right, which is the enabling business and becoming a strategic partner to your CEO. The second one today, more and more important, is the governance and whether it is board, whether it is compliance, because all of that is a given, right? You get no kudos for doing it right, but you'll get rogered if you don't do it right. So while more and more transaction processing can get automated, as was being discussed in the panel, the buck stops with you, right? And therefore, here also in this field, again, culture is very important, and setting up the right structures is very important. Whether it is having an independent board, whether it is having the relevant committees, and especially you mentioned a comment regarding the startup ecosystem, right? They're starting to behave like a public company. Even when you are a Series B, Series C company, and maybe few years away from being public, is very, very important because that's where you will learn, the company will learn that what is the expectation from a public market standpoint, and that should be the ultimate gold standard. Thank you.
No, thanks a lot, Abhishek. I think reporting is extremely important, especially what you give to the shareholders or potential shareholders. So I think very well said. I think I'd like to come to Prateek next. So Prateek, the question which I had for you was, has it become easier or difficult to maintain transparency, especially with these global upheavals? You know, there's a lot of supply chain disruption, you know, with the whole China, Ukraine, Russia situation. As a CFO, how do you walk the tightrope between non-compliance and assuring stakeholders? Because, you know, a lot of people must be coming to you saying it's just a small issue, right? Or there's such a, should we focus on the business or compliance? So over to you.
No, thanks very much. So thank you everyone for me being here. So I guess this is a very relevant question, Arpinder, that you asked as to, you know, how do you people view compliance first and foremost. The first thing is that whether it should be viewed as a burden, as just check in the box stuff, or is it really that helps a business grow and achieve scale. You know, our belief has always been that while initially everything looks like a burden, just because it's evolving, it's changing, you build a process and then there is something changes and then again you have to rebuild the process. But once it stabilizes, the benefits are really visible in the longer term. And once you see those benefits, it becomes easy to convince everyone around as to why is it that we need to follow that compliance and why is it that we need to, you know, align to it. So I would say is that the tougher task is to convince everyone how compliance is not a burden, whether it is any operational compliance, any ESG related compliances or any other compliances. But once everyone realizes the benefit of being compliance oriented and how it helps in strengthening the processes, I think everyone gathers around so that there is no non-compliance. You're right. I mean, honestly, I've never faced a situation where there is a non-compliance and we're debating whether it should be disclosed or not. But there are many other aspects regarding the disclosure. And it's been like 7 years in IndiaMART. When we were a private company, we also used to follow the similar standards. And now we are listed for last 3 years. For us, deciding whether something to disclose or not disclose, I would say is that anything falls in 3 different buckets. One is clearly this is material significant, we should disclose. Other is clearly this is immaterial, non-significant, we should not disclose. And then 80% of the things will fall in between, which are few people will think it's significant, few people will say it's non-significant. I am a believer of the policy that whenever you are in doubt, you should disclose rather than not disclosing it. So that's how you know, we've been able to work on our disclosures, all our investor disclosures or everything, wherein we try and disclose most of these stuffs. Wherever anybody thinks that he needs it for whatever reason, we generally disclose and make it part of our investor communications.
I think thanks a lot for that, Prateek. I think it's good that, I think transparency is very critical because just my belief is there's so many whistleblowers. If you don't disclose it, somebody else will on your behalf. So better you be in the forefront of it.
Yeah, and also the other thing is also like, you know, if you disclose it, probably I think becomes a lot more reassuring for the others rather than somebody else disclosing it. I mean, you know, you take an example of like, let's say, I'm sure many of us are parents and there are kids. If kids does any mistake, if kids himself come and accept that I've done a mistake and I've learned from it, I'll correct it from now on, it's a lot more reassuring rather than somebody else saying, look, you know, your kid did that and you're aware, you're not aware. Yeah. So I would say is that from that perspective, if there is anything, any goof up that has also happened, it's advisable to go and disclose and say that we learned from the mistake and then move on.
No, thank you, Prateek. And just moving on to Abhinav. So Abhinav, you're also kind of in a startup, though large startup, and you do a lot of work with consumers. You were just telling me how many blood tests you are planning to do across, and you offered to do mine free of cost. But the fact is that the ever-evolving regulatory landscape around startups, especially with the amount of consumers you have, you want to get, how do you rejig your integrity framework to deal with all of this? And last controversial question is, what I understand with startups is there are a lot of 25-year-olds who've just fresh out of college. Do they really understand compliance? Do they understand anything you're saying?
So
let me take a step back here, and we have seen how business were run by various organizations pre-COVID and post-COVID. There's a significant change we have witnessed, like online business or adoption of digital payment. There's a significant shift happening across the board to digitization or to have everything online or to store records or details in electronic form. And see, there's a very famous saying. Electric bulb is not an extension of improvement in candle or series of improvement in candle. So at times you need to revisit what you are doing and how you are doing. And see, innovation does not have any age. If you have any innovative idea, if you believe that is the need of the hour, that will sail through. And see, second thing here is today the way technology is being adopted by organization, government is also adopting technology. And the expectation from government is the compliance should go real time. That might be, that we might be seeing this in near future, but we are witnessing those stuff in form of e-invoicing, e-way bills and all. So this is the what government is expecting from all organization. And so for compliance, we need to understand one basic thing. The cost of non-compliance is in multiples to the cost of compliance. So that doesn't have any bearing like what is your age or how old you are. You need to have this seriousness in your DNA. That's the most important thing. And what at Pharmeasy, what we did is we built a robust audit committee and board, and they not only mentor us in terms of how to do the business, they also help us in to be up ahead of the curve in all the compliance matters. And one very good thing here is these new age startups understand that, see, they don't take compliance as a burden, they take this as an opportunity. So if you are a well compliant company, you will be preferred by investors, you will be preferred by government, you will be preferred by suppliers, and you will be preferred by employees as well. So in a nutshell, so being CFO or being leader, finance leader, you should always go to the board, ask for significant budget or good amount of budget to be spent on automating the compliances. Reason being कि these days, this is the age where future belong to those who move fast. Fast in adopting technological landscape or changing business dynamics. If you believe कि you'll do once everybody did it, then you might be late and you may miss the boat. You should be firm enough. You should go and ask board and for budget to be spent on automating the compliances, because now in today's time you cannot do compliance manually. And second thing here is, if you want to stay ahead of the curve, you need to move fast how government is moving. Today government have changed things so significantly in terms of compliances. Most of the things are digital. So if you have to ahead of the curve, you need to move fast than the government. Today it's not post facto thing. You have to be real time compliant on various things, and things are moving in that direction.
Yeah.
Can I add to your comment on 25-year-old, because OYO's average median age will be, of the employees will be about 25, right? And I spent 10 years in GE, was earlier part of GE's corporate audit staff. There the DNA was injected from day one, integrity, spirit, letter, everything. We realized that nobody's going to listen here, right? So we said that, okay, how do we communicate this in a language that people will understand? So we said, okay, let's gamify this entire thing. So we prepared our code of conduct, right? And we prepared simple tests around it. For example, your brother-in-law owns a hotel, and that hotel is now is going to be signed up with OYO. A, I have no responsibility, I am doing my job. B, I have to disclose because there could be a potential conflict of interest, right? Second, there's a government tender happening, right? There's an agent who's involved, and he's saying that if you give me X%, I will assure you a tender. And the guy is saying, net off the commission, we will still make a lot of money. What is your responsibility? So we actually created case studies and content which was mobile friendly, which people could, young employees, sales managers, business development managers could train themselves on and then get certified internally, get tested. And then, if people won't still take the test, we shut off their emails. We actually shut off their emails, and it is an annual testing. If you don't do it, you will not be able to work. Yeah. So you got to enable, if you want to achieve an objective, like any other business problem you solve, the problem of governance has also to be, needs to be solved in a manner where it will get done, rather than coming from a very, very high ivory tower and, preaching sort of a manner. Thought I'll add just.
No, I think that's very well said, because we've seen companies which have moved away from very legal type of compliance trainings to gamified versions like you. So I think what Abhishek said, all of you should consider that, because that's really the cool thing which makes it interesting for people and all people. And coming back to Abhinav, I picked up one point from what you said is about the fact that technology is a must. I think that maybe if you want to add some more details around it, I think it's a very important topic.
So in our case, we are using, we are tech first company. We are using RPAs, we are using artificial intelligence, not only in compliance or monitoring consumer experience, but in all the functions of the company, be it HR, be it finance, be it IT, or wherever it is. Because we believe that there is a lot of insight that can be that will come out of this data, and that will help you to move fast. So that's the need of the hour. This is what I believe.
No, thanks for that. Coming to you, Parag, I think you're different from all of them. Like you're still the old world industry. So you're sitting here quietly. So talk about your governance goals around ESG. It's the hottest, coolest topic. I know EY, we're hiring like thousands of people globally. We think ESG, everyone's going to become ESG compliant, balance sheets, financials. So your views on that.
So thanks Arpinder. And I think ESG has gained a lot of momentum in the last few years, given the fact that investors' mandates are now aligned to ESG. So for any investment decisions for any fund managers, what used to be going to an investment committee or a risk committee, now it also goes to an ESG committee. This is driving and channelizing all investments into businesses where they are ESG compliant. And of course, going back to it, we are signatories to the COP and COP 26 and then later 30, and we've signed up our targets, and all of that is therefore to channelize in terms of climate change and lower carbon emissions. For us as Adani Group, we've taken a lot of steps in strengthening ESG's framework. We have actually constituted a committee below the board, what we call it as the Corporate Responsibility Committee. This committee is purely for ESG. So it is a committee which consists of more than 50% of independent directors. And the idea is to give direction, impetus to all the ESG initiatives. For example, from a governance standpoint of view, whilst we all have as listed entities, audit committees, NRCs, risk committees, we have most of these committees being 100% independent. Further, we have sub-risk committees, be it in terms of tax, regulatory, legal risks, be it in terms of M&As. As a B2C company, we have a public consumer committee where the committee, sits in the shoes of the consumers to address what possible grievances could be and therefore how we should address them. All of this is to strengthen in a manner the governance of the organization, and therefore, that solves G of the ESG part. Similarly, as far as environmental perspectives are concerned, and as we move in terms of energy transition, lower carbon emission, lots of things are being done. For example, today, when it comes to the end consumers, every consumer gets a gas utility bill or electricity utility bill. These gas utility bill from Adani Gas are digitally being signed and WhatsApped on every consumer. So there is no paper process that is, being done at all. Today, almost 96% of our collections are all digital. And whilst, on one hand, it is improving the digitalization curve, but more so it's also, helping in the environmental initiative of saving paper. So almost close to 2.5 million sheets of paper which are being printed on an annual basis for us are actually being saved in terms of trees. Similarly, the entire of our CNG stations, entire our sites, entire our offices, all are solarized. So again, that's an initiative in terms of moving into lower carbon emission. We've started a new novel concept of what we call as Greenmosphere, picked up from the word atmosphere. And this Greenmosphere initiative is doing three things. A, it is actually doing energy audits, which is going to every consumer, even industrial consumers, to help them save energy. B, it actually is creating awareness about the benefits of a cleaner environment by going into schools. We've gone to almost 50 plus schools by now in educating the younger generation of what environmental is and what initiatives one should take out there. Similarly, besides this, there are, green plantation being done, and some of them, more in terms of the Japanese origin, the Miyawaki plantation, which allows, lesser carbon retention. So these initiatives are being taken, and even the consumers, the stakeholders, contractors, vendors, all are encouraged to participate, to contribute to what we call as the ESG corpus out here. So this is the Greenmosphere initiative that we've taken on strengthening the environmental part of it. On the social part of it, similarly, when we are looking at R&R, when we are looking at, building in terms of locations, plans on a pan-India basis, the people who are there, providing them employment, providing, support of schooling to the children of, of those people who are working. Those sorts of initiatives are being done in terms of strengthening S. And that's how we are comprehensively doing an ESG framework, well governed under a board committee to ensure that, each one is being strengthened. In fact, similarly, even when it comes to our contractors are getting ranked based on, their performance, but along with the performance on how they are taking some of these initiatives. So it's a very well laid out plan on what we are working. And I think ESG is a precondition now. So to that extent, it is an enabler to ensure that corporates and all are driving towards, a better society.
Well, thanks a lot. Thanks a lot, Parag. I think that's for all of us who are worried about climate change, I think it's great to hear. Coming to you, Prateek, a bit, I think CFOs have a lot of pressure on their heads. But I'd like to add one more to your head, saying diversity and inclusion goals. So at least my perception is diversity and inclusion is become also reporting and a reality. So any thoughts on that and what role a CFO plays in that?
Sure. I think CFO is one that anything comes to money, CFO becomes important. So thinking about the newer roles and including diversity would require very different budgets, different approach. So that comes in play. But more importantly, the way I see it is, the CFO also becomes important from a driving mindset change perspective. And when we look at this, at IndiaMART, we debated this, that what does diversity means when we talk about diversity. Typically, people consider that this is only a gender diversity. But the way we see it is that, it can be interpreted in many ways. And the real benefit comes in if we look at it much more holistically. So while gender is one aspect of looking at diversity, but the other aspect is also, as you rightly said in one of the questions, how do you make 25-year-old works with 45-year-old? That's a very different diversity, different experience, different thought process. How do you ensure that a person from North India mingles with person with South India? So it's a regional or geographical diversity that comes into play. So looking at holistically and then having a team which has right ingredient of all the different backgrounds is when we believe that we would likely to see the real benefits of having a diverse team. And In IndiaMART, I mean, we do have very good participations of women, very good participations of younger employees. The average age is roughly around 28 odd years for our organization. So from that perspective, once everyone accepts it, then it becomes easy to drive it. The challenge becomes that quantifying the benefit of having a diverse team, it becomes slightly difficult to do so as to, how do you quantify that particular benefit? While everyone realizes that having a different perspective in a room always helps in taking much better decisions so that, all the perspectives are covered, there are no black spots when you're taking a decision, but quantifying as to whether it would lead to X percentage more revenue or Y percentage lesser cost, it becomes slightly difficult to do so. So I would say it's, in a matter of fact, would be slightly leap of faith at the moment. And probably I think as we continue to build on diverse teams, we would start seeing the benefits coming in much larger way. The second aspect is that once everyone appreciates the need and understands the importance of having diversity, second is that what should be our realistic targets? Because on one hand, we can say, look, that we would like to achieve X percentage, Y percentage, but we have to be cognizant of the fact that it's not only us, it's the entire ecosystem. So the talent needs to be available in that thing if you would like to do that. So keeping those realistic checks in mind, what should be the targets and how do we get right resources and the capital allocation to achieve that? So that's what I would say is that the role of CFO would be in this.
If I may add to Prateek, and Prateek very well articulated, but I think diversity is a very large sort of definition. So in terms of robust decision making, which is creating task forces on assignments where you have different sets of skills, different sets of people. We have a sponsor partner in Total, who has almost close to 170 professions or skills which are being aligned and mapped. And that's again to bring in diversity. Diversity is also in terms of language. For example, when it comes to our own consumers who's sitting, say, in Ahmedabad, gets to speak in Gujarati, and for that matter, somebody who's in South speaks the local language. So that's also diversity. Finally, whilst, there is gender diversity, etc., also the specially abled people. So there is also an initiative, where we are looking at building in specially abled people who can support in certain areas, certain functions, and bring their own different perspective.
No, I think very well put, both Prateek and Parag. I think diversity is very, very critical today. I think as ESG is, and at least I can tell you in EY also, we so much focus on it, about empowering people, etc. Coming to you, Abhishek, I think you have operations in India. As I understood earlier, you offered me a good rate on a hotel property in Europe. So anybody who's interested in good rates, please get in touch with Abhishek after this. He's getting fantastic rates in Austria and other countries. But you have a role of being a CFO in India and Europe. So I want to hear a little bit about you. How do you manage that? Is your role in India a little different than your role in Europe, or you keep a standard which is consistent in the two regions? That's my first question. Second is, how do you manage KPIs? Because I always find KPIs sometimes leads to governance issues. You're moving towards the target irrespective of how you reach that target. So thoughts on that?
Yeah. And we are one of the largest vacation home companies in Europe. So the rate offered to Arpinder is also open to the CFO community. I've always had the group responsibility. My colleague Deepak is the CFO of our Europe business as well, and he's based in Zurich. While the core responsibilities of business partnership, controllership, governance remain the same, I think there's definitely cultural nuances of how to engage with people of different geographies. There's definitely different legal requirements. Europe is a tough legal market to work in. For example, the audit standards in Netherlands are especially tough. So it needs more planning. It needs more resource allocation. They need to be given a more heads up about the timelines and more engagement. So yeah, I think ultimately, it is about getting the right experts because one can only do that much and have the right team in place and be ready to roll your sleeves and get your hands dirty and learn about it. So it's been an interesting experience for sure. On your second question regarding KPIs, look, I think my view is that the compliance and integrity are the ticket to the table, right? Without that, entry is not permitted in the hall. After that, what you can or cannot do in the hall is up to your performance. But without that, you're not allowed to enter. So we have a zero tolerance policy, and then you have to make an example when you do enter into situations where one has to deal with integrity matters. And we as a company have always had a zero tolerance policy on those matters. And I think that that flows across the organization because people see that what is allowed and what is acceptable and what is not acceptable. So I think it is the say-do ratio of the leadership. It is tone from the top that matters more than any written policy document.
No, thanks a lot. I think very well said. I think a lot of these jurisdictions, to answer your first question, I think are very complicated. And you have to really understand all of that sitting out of India. And I think your second point is absolutely valid. I think there's no compromise to zero tolerance. Because either zero tolerance or it's not zero tolerance.
Yeah.
So I think when people say it's middling zero, 0.5, I think that doesn't work, just if people are worried about that. Now coming to Abhinav. Abhinav, you were telling me earlier that, there's a big acquisition you already did at Pharmeasy, which was Thyrocare. We all read about it. Obviously, Thyrocare was a listed entity. You acquired it. What is the role of a CFO today on a business table? I used to be a CFO in my old life. And I remember getting a seat on the table where they actually hear your point of view on business. How do you get there? Rather than just, here's my balance sheet, share some numbers, and you're like the side guy having coffee.
See, today the role of CFO is they are enabler, then to controller. They enable the business because, see, at the end of the day, whatever organization is doing has to result into PAT, or that has to bring some social awareness or social change. That's the agenda. So whatever organization is doing should lead to profitability or should lead to legacy for the organization. That might not be immediately, that might be in near future, but that should create a legacy for the entire enterprise. And CFO being the topmost officer of finance in the company, they understand how money is flowing, and they have to ensure sustainability of the organization. And see, one thing they are doing is they ensure good governance. It is there in the organization. They shift gears from good to great in terms of governance, because for business guys, governance might not be a agenda for them to drive, but for CFO, they drive governance to ensure because it's a litmus test of sustainability. They push governance in terms of policies across the board. They keep on monitoring the policy. They keep on updating board, and they keep on updating board how things are evolving in the organization. And the second important thing here is your board should be competent enough to absorb all these changes. It should not be kind of chai, coffee, board kind of a thing. And see, in our case, like we have appointed Aditya Puri as a chairman, and he, like audit committee chairman is Subramaniam Subbu. Both of them are guiding us on our day-to-day how to do things, because they carry enormous experience with them, and this help us in understanding or visualizing the problem before it becomes a problem. So this is how we are looking at these things.
No, thanks a lot, Abhinav. I think getting mentors is also very critical. And I think that's something we all underrate, but I think more and more companies I see are doing that. And I think it's great to have mentors in that sense. Parag, coming to you, So you told me earlier you're not a chartered accountant and you're better than the CAs when it comes to being a CFO. So maybe you can shed some light for the room which has got 99% CAs. But on a serious note, the modern CFO is changing, right? He's more a business partner, as Abhishek said and everybody else said. So a little, how your role has transformed, how do you cater to it? So just a little bit about the modern CFO as I put it.
So Arvinder, let me take you through the journey on how CFO's role has evolved over a period of time. And CFO a few decades back was more an inward role. I would say there was very little differentiation between what we now call as a financial controller and what possibly we were calling a CFO a few decades back. So that I think, is where the entire process started of what we call as a CFO's role. Very inward, about processes, policies, making sure your balance sheets, everything is intact, audit, etc. Then it came in the early, 2008 onwards, where all the corporates were, especially the listed entities, were in the eyes of the investors. A lot of areas, questions around governance, on how investors wanted to hear not just the CEO of a business, but also the CFO on his take on the business. And that really started the journey of what I would call as an outward role. And that's when, the CFO became actually as much as a face of the entity, which was not the case. So from a very inward role, it went to a very outward role. And I think the last 2-3 years in the kind of volatility, the pandemic that we've gone through, it has added different dimensions to that role. It is a fulcrum between the business and finance. Digitalization is one of the other larger tasks, directly or indirectly, that is being seen by the CFO. And that's what has really, made it, a position which gives insight and has an ability to forecast analytics on data and therefore to see what could go wrong. And certainly CFO as the gatekeeper, has to mitigate any potential risks. So that's how the role has changed, where there is a lot more about business rather than just about, the core traditional role that was there a few decades back of CFO.
Okay. So one question to Parag, you and Abhishek. Should a CFO really aspire to become a CEO now? Enough for being a gatekeeper, कितना time हम gate पे बैठे रहेंगे?
I think, if, like I said, CFO or a CEO, I think each one is a celebrated role now because of the importance of each area. It is, of course, individual aspiration. And yes, CFOs, we've seen more so in the recent times, moving into business and CEO roles. So I think, all those possibilities are now clearly available for a CFO. I think it's really on the CFO and his desire of what he wants to aspire. But I think from a perspective of, charting into a CEO or own journey, I think it is certainly more than ever being welcomed.
Abhishek, thoughts on that?
I'll answer this question with the actual anecdote from one of my bosses at GE who became a business head. He told me that when you're a CFO, you're an officer, right? That people come to you for budgets, you sign things, so you have an office, you're an officer. The moment you become a business head or a CEO, you become a sales guy. There you have to go to clients, sit outside and wait for them, right? So, and then, they can refuse the meeting even after making you wait for, 1 hour, 2 hour, whatever, right? So, that journey is 100% possible, but it is a very personal decision, right? It is a decision on what you enjoy the most. And in a sense, what Parag was outlining, the CFO role today is also a sales guy's role, right? You are the salesman of the company's performance to the investors. You are a salesman of the company's governance and compliance culture to the board and the independent, to the shareholders and everyone. And you're a salesperson for the talent that you want to attract, right? So it depends on what kind of sales one wants to do. And it is a personal choice. There is no capability limitation anywhere.
Okay. No, thanks for that, Abhishek. I'd like to ask a question from both Abhinav and Prateek. One of the things I find is, this whole governance system of zero tolerance, as Abhishek said it. Zero tolerance is said easily, but practicing it is not easy. at least what I have seen in practice is sacking a star performer is always difficult. Like you said, the sales guy who sits outside. You know, if a person is really good at sitting outside and getting you the big deals as a rainmaker, sacking him is not easy. So question is, do you actually, both of you, and I'll take each one at a time, do you actually believe that we do have zero tolerance in India? Because my impression is that no one gets sacked. Everyone is asked to resign, as a first example. So your thoughts first on that, because are we really practicing it?
Yeah, I would say is that the practice is there, zero tolerance, certainly. The question is, when you say zero tolerance, I mean, there are a few things which you would say zero tolerance. There are a few things which you say, okay, somewhat of things you're still okay with, as long as those are not repeated again. So there are warning systems that you do. I would say that it is important to see is that you don't reach at that stage. And, how do you act beforehand and have enough systems in place, counseling in place, guidance in place, value systems in place, so that you don't end up taking or dealing with an instance wherein something like this has happened. Being more proactive, understanding of people's aspirations as to what they will do and what they will not do, understanding systems that there are no undue pressures on them, or there is no undue incentivization to the people, which directs somebody to behave in a certain way you would not like it to do. To my mind, I think those are more important aspects to see. Once something has happened, then of course a person takes a decision. Anyway, I've seen people, the decisions being taken wherein something has happened, but we always go back and see that is it actually, or was it a mistake of that person concerned, or was there something in the systems and the incentivization which would have led that person to behave in a way you would not have wanted it to be. So figuring that thing out and removing that from the system is more important from my standpoint.
No, I agree. I think fixing the system is most important.
There are 2 points here. One is that to follow zero tolerance is kind of little difficult, because as a person we always have emotional angle in whatever we do. But at times it becomes necessary, reason being you have to set examples for others. So that's, we need to understand. And see, we always build a legacy for generations to come. So there certain things are kind of must, and certain things are kind of necessary. We need to draw a line for everything. So at times things become very important, and you can't take any leeway there. So there has to be a zero tolerance. Reason being is this, that examples for others, and people will have certain fear in their mind if they are doing anything wrong. And there's of course a human angle to it, but I believe there has to be a zero tolerance thing in any policy or in whatever you do.
No, thanks for that. I think that's very important. I also believe that actually. So Abhishek, any closing comments?
No, look, I think this is a great time to be a finance leader of a company. Not only you get to see the holistic view, you get to interact, learn about the business. You're involved in the fundraising activities, the controllership, governance board. So I would, and I think all of the discussions today have been very helpful to me as well. Thank you.
Thanks a lot, Abhishek, and thanks for, you informed me before I got my letter. And this is not my termination letter, just for the record. But Abhinav, last few comments as we wrap up.
I think things are changing today. Finance is a critical role. It's not like controlling these days, it's like enabling business. We have to ensure there is good governance, because this will help organization to grow far, to go far, and have adoption of technology so that we can go fast wherever we want to go. That's the main thing.
Okay, thank you. Prateek, last comments from your end.
I would say it's an exciting role. I mean, I'm quite excited. But more importantly, yeah, challenging role because the things are evolving. And the thing which helps and has helped me is, how can you be more proactive? Because making any change, there are two things. One is a deadline and second is change. If you segregate the two, being proactive, you change first and the deadline comes later. It becomes much more easy to go for that change. So I would say is that being proactive always helps, and it's fairly exciting to do.
I think it is exciting times for any finance leader, and certainly the way I see things, compliance, controls, fundraising, multifarious roles, and very much so linked with business. But I think importantly, the CFO has the ability to impact and an impact which can be there for long in an organization, and it can actually shape the journey of an organization. So I think that's very, very important. Thank you.
No, thank you. Thank you to the panel. Sorry, we have less time, as I've just been informed. But the fact is that I think great comments. Hopefully you took some of them. You can meet some of them after the session is over to ask them some questions. In just closing, I'll just add 2 points to it, is that, compliance is like brakes. The best cars in the world are the ones which have the best brakes. And the best cars in the world, nowadays we know which have the best seat belts. So the fact is that it's very important to have brakes and seat belts, and your car can go as fast as you want. So I consider compliance very similar to that. And I also believe in zero tolerance, which was mentioned. And lastly, technology. I think which you mentioned, I think strongly believe in that. So hopefully you enjoyed it. I wish we had more time, but thank you so much.
Thank you.
Thank you. Thank you so much.